that tail bar way up there, way elevated, you're selling on that bar before that bar finishes. You're selling. It's an elevated position way above the 20. This also was a sell bar. Why? Fat green bar way above the 20-period moving average. You're selling into that bar before that bar finishes. So think about this, guys. Think about this. Stocks, and this is something that I want you to remember. Stocks can get away from the 20. They can't stay away from the 20. They can get there, but they snap back, you see? They get far away, but they can't stay there. So when they're far away, that's action time. They can't stay elevated above. The 20 yanks the stock back in. And they can't get deep below. The 20 pulls the stock back up. They can get there. It can't stay there. And any one of these three bars that forms outside the 20 here is your signal that a violent snapback is about to happen. This action away from the 20 is your key to consistent accuracy in the market. You're playing it at the highest possible odds of a move back to the mean. Does this make sense? Yes? No? Maybe? A little bit? Tiny bit? Okay. All right. Yes. Now, you can clearly see where my traders dove into this stock. They were watching Clarion Inc. drop. And all they're doing, I love a stock. I love a rich company that actually is in trouble. Greatest opportunity on the planet Earth. I call it panic profits. When rich companies get in trouble, it's a wealth opportunity. When a British Petroleum gets in trouble, I know what happened with the spill. It was horrible and all that stuff. I'm talking about one of the richest companies in the entire world. All right? Not going anywhere. All right? Down. The first sign of a major bull elephant bar is when you know the smart money, the big money, is now starting to step back into the tub. Down. Boom! Look at that giant green bar right there. That's your first sign that this drop has attracted big money right there. And where did my traders add after their initial buy on that bar? The biggest green bar on the whole chart is here. Where was their add? How many bars later? That's right. Single red bar. When does the high of a single red bar get taken out? Right there. Bam! Right, we don't say booyah in London, right? We say bam. All right. Bam! All right. Bam! Now, wait a minute. There's another ad. After this ad. Where is it? What kind of bar is this? Bottoming tail bar? Bam! Add into it. Buy into that bar toward the end of the bar's formation. Okay? And so forth. So listen, we buy every bull elephant bar, buy every bottoming tail bar, buy every single red bar ignored, unless the stock starts forming them ways separated away from the 20. Now they're sell events. Simple. Not easy. This is simple. This is easy for you now because the bars are not moving, are they? Look at it. Not moving. When that bar is going up and down, right, and your head's bobbing like this, right, the market starts to play a lot of traders. So, listen, this is not rocket science, guys. Stocks go up and down. You just got to know when the likelihood of the up move is higher than the down move. When a stock is separated way up above the 20, the likelihood of a pullback is tremendously higher than an additional rally. It's simple. It's simple, but it's not easy. I tell this story often. I have twin daughters. They're my youngest. They're 5. And when they were about 3, we went to this carnival that came to town or whatever. And they love Nemo. Have you heard of Nemo? The orange fish? They love Nemo. So we passed this booth with a giant Nemo hanging from the ceiling. And of course, they went berserk, and we couldn't leave until I found a way to get the Nemo. So I walk up to the guy in the booth and said, listen, what does it take for me to get that Nemo? All right, he says, all you got to do is put this ball in that basket. And I'm saying, that basket? Yes, that one right there. But that basket's 2 feet in front of me. That's it. That's it, sir. How many tries do I get? You get 3 tries. How much do I have to pay for 3 tries? $5. But that's all I do. That basket. How many? All 3 of them? No, 1 of the 3. In that basket, and that's yours. $5? That's it. Here's $5. $450 later, I am walking out of the thing with Nemo. All right? Simple. Put this ball in that basket. Not easy. Simple is not easy. These are simple, powerful concepts. Find the biggest green bars on the chart. Find the bottoming tails on the chart and find the single red bars. And then find the points where the stock separates from the 20. And you are in business. All you do have to do is wrap trade and money management around those 3 things. And you can trade anything that human beings trade back and forth between each other. These are nothing more than the footprints of human emotions at work. The separation above the 20 is the pinnacle of greed. Do you follow? The separation way below the 20 is the pinnacle of fear. And when that plunge way below the 20 all of a sudden comes back off the low and forms a bottoming tail, it's the first time greed on the smart side has reared its head in a while since the collapse. So all of these things are basically just playing 2 emotions. All right? Here, if you watch this chart from the left, here's a bottoming tail bar. Here's a bottoming tail bar. Here's one of the clearest bottoming tail bars hiding in the middle of the slop. That's a buy. Here's the fattest, forget this, here's the fattest green bar on the entire chart. There is no bar the size of this green bar with the fullness of that green bar on the entire chart. That's your first buy if you miss that bar. This is really your buy. That's your buy too. But the separation away from the 20 has to bring some profit taking into play. You can get far away from the 20. You can't stay far away from the 20. And you do not wait for red to sell way away from the 20. I teach my traders that you sell into solid green bars that form way above the 20. Do not wait for red to happen way above the 20. Oftentimes it's too late. Not all the time, but often it's too late. Now, if you've sold way above the 20, somewhere up in this area, doesn't matter if you sold this bar, or all of them, if you're still interested in the stock, your first buy into the stock again is this bar, bottoming tail bar. Then you're simply waiting for the next bullish bar to form. Bam, there's your second buy. Fattest, tallest, longest green bar in the chart. Okay? Third buy. Another fat, long green bar in the chart. It's simple measurement. This is the biggest green bar I've seen in a while. It may not be the absolute biggest, but one of the biggest. Powerful. Simple, but powerful. Not easy, granted, not easy. Now, look through the stock. I love when stocks are producing what I call slop. Slop is no upside, no downside, salt and pepper. The stock is doing nothing. It's boring. But in the middle of that boredom, the institutions are at work. And inside of the slop, if you get a fat, solid green bar, and you see another bottoming tail bar inside the slop, something is brewing. All right? Fat, solid green bar. Wait. 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 And then they can't keep stepping in if they step in often enough, it's just eventually going to take off. Here's your last buy. Now, if you look carefully, my traders pick up the nuances. Single red bar, the high of which is taken out. Add. Single red bar, the high of which is taken out. Single red bar, the high of which is taken out, unless they consider that too far above the 20-period moving average. But one thing is for sure, that fat green bar, way above the 20, is a sell bar. And it's a sell bar long before where it closed, because if it loses more than a third of its greenness, they're out on an elevated fat green bar.